Has your bank put limits on how much money you can deposit onto exchanges to buy crypto? Screw them. SwissBorg's got your back. They've created personalized IBAN numbers, so you can send as much money as you like to buy crypto. SwissBorg. Hello everybody, welcome back. Let's get straight into it then, shall we? With Bitcoin pulling back so far today. First day of the trading week, proper trading week, being the 10 exponential sitting basically at 29,700. So pretty much a clean retest of that. We can zoom right in just to see the confluence of that. It's pretty neat and tidy. Front run ever so slightly, but yeah, that's your Bitcoin. And to be fair, like, that is your first opportunity to buy a dip, really, or your expectation for a move back up from here. If we do lose this area, though, it's still not a big deal at all. Still bullish momentum, still everything looking quite good, and we'll be coming down by another just short of $1,000 to your 21 and your 20 simple moving average, basically just below 29,000. Even if we were to do that and bounce from there, we're still not having a cheeky span touch price action. So this uptrend signal, this trend signal in the Itchy Cloud, still in play, not been cancelled out. Unlike our friend over here with Bitcoin dominance, which has been cancelled out. We've closed in there now. So that uptrend signal is finally played out. So this probably, as far as I'm concerned, means that buying the dips, even though Bitcoin is the chart to trade, buying the dips would better be done on the altcoins now. You're more likely to see upside on a bounce across the market now for altcoins. So altcoins are going to move with Bitcoin, but probably more aggressively just for a short period of time. So continuation of this, minuscule and weak, pathetic alt season, but it is still taking place, believe it or not. This is what an alt season looks like from a low level, I suppose. But yeah, that's my that would be my expectation. Now, I wanted to wait for the trading week to begin, which it has now. This is Monday now, before I committed my next 20% of the overall 50 that I'm looking to apply to the market from the Bitcoin that I bought at 21,500. So I'm in 30%. Obviously, I've got another 10 and another 10 after that. Whether I deploy that today is a different story. It depends on certain charts and where they are looking to bounce from, and if there's confluence between that dip and the Bitcoin one. But I think there will be, and I think buying the dip on altcoins is probably going to be the better course of action. So let's have a look at traditional markets briefly. So this is the euro. So now the euro's come back down a little bit. We wanted to see a build a base above this level, so we came down, and we've not quite retested a moving average, so we could easily see a little bit further downside before a more secure bounce around these levels. But to expect a breakdown below, below this trend line is not hard to imagine in the short term, but seems unlikely. So we're talking a support of around 109.4 really for the euro. Again, the euro's bullish chart. We've got the golden cross retest, bounce from that, broke above all major moving averages and the resistance. Plus, we've got the pump signal that was generated around these levels. That's all still playing out. That's the same thing that's happening with the S&P as well. We've got the golden cross. We've got a move up above all major moving averages with a view to maybe pull back down into 4,113 thereabouts, 10 exponential. So all charts having the same confluence as each other. Everything looking good. Rhythm across all boards. There is 2 drives of bearish divergence, but to be honest, it's only 2 drives. It's not 3. We will be looking for a 3rd drive really before we start to get scared out of any kind of position in any of these things really. So a little bit of downside maybe today in the short term, and just nothing but an opportunity to buy the dip and pick it up for what could be like another decent move up across the board for everything. Gold pulled back significantly actually, for what it's worth, and still managed to gain support around the Bollinger Band center on this daily. So all looking pretty good. Gold doing the same thing as all these other charts, pulled back into the 200 exponential, golden cross retest, and a big bounce from there onto a new local high. So all the charts doing the same as everything really. And yeah, we got 1 drive of bearish divergence. It's really nothing. So the main thing to think about really is not this silly trend line I'm drawing here, but the total too. So we're talking about alt season still. We're still feeling alt season is a likely possibility. We're pulling back now on the dominance chart from the higher level. So 3 entry points really I put in here. 1, 2, I know that 3, and yeah, there was a 4th one, but it was only for 5%. So yeah, we're looking for we're looking for some further downside on dominance chart and further upside on the total market cap. Again, standard trading stuff really going on here. So we broke out above all major moving averages, had a go and cross, retested it down here, and that's where we went on to make a new local high. So same as everything really, is the same thing. This is why I like the charts, and I've liked them for a while, because they're all doing the same thing, and they complement the fundamentals from what central banks are so far agreeing on, which is that the Fed are trying to slow it, ECB, Bank of England, and everybody else are trying to speed it up. So it's gonna force the dollar down, and with that the Dixie down, and everything generally goes up. So yeah, it's a sweeping, oversimplified statement, but it's generally is the case, and so everything is benefiting from that. So we've got the technicals and the fundamentals. You marry them together, and they're all working out together. The charts are very similar, but they're not exactly the same, but they're all quite similar. So the next major target for the total 2 is going to be what, 676 billion, and that is probably going to break, as far as I can see. There's no reason why it's not going to break that, because that's just your first level. I expect a pullback from there, but inevitably, in my opinion, it's going to break from there, and then we target the next major area, which is actually quite a decent move. We'd be looking around these $800 billion zones, really. There's not an enormous amount of perfect confluence or anything like that, but this is a general target of where we would be sailing up to next. There's not a great deal of resistance above us after this area is broken, and if we break that, let's just measure it from the breakout here, that we sail up to another 29%. And so if we were to think about the the area of the golden cross retest all the way up to the 79%, that gives us about a 55% move on all of the total market cap too. So if you go to total 3, you could measure it up into the 60%. Total 2, less so, because obviously Ethereum is such a main driver of the total 2. If we think about what we're looking at for Ethereum to Bitcoin, it's still pretty good, but there's no pump signal on here yet. But we are above all major moving averages on the daily here, apart from the 200 simple. 200 exponential getting a bit of a retest today, so we closed above there yesterday and a retest of it today, so it actually looks pretty sweet. Moving averages all moving back up again, and we'll be looking for the top of this range, to be honest with you, for the next major area of resistance. Major area, so maybe possibly even a top. There'll be stumbling blocks along the way, I'd imagine, but this will be the next major area. If we were to measure that from here to here, we're talking about a 21% move. So more or less looking at the total market cap to emphasize Ethereum to Bitcoin's move. So it's like what I was saying on the last video about this alt season. The next major target is about a 25% move, generally speaking, and then some altcoins, smaller mid caps to small caps. If the alt season continues, then yeah, they're the ones who'll be doing the larger moves. But Ethereum, from the bottom to the top, obviously is going to be less because the market cap's more, and we're talking about about 37%. Obviously, smaller caps would do much more than that if the alt season works at all. So still, everything looks very much in favor of the overall analysis. Still looking like it still wants to play out, to be honest with you. It's definitely slow and sluggish, and this is week 5. I thought we'd start to see some major moves after week 3. We started to get them in week 4. So yeah, time isn't the greatest, but yeah, as far as the analysis is concerned, it still does apply. It still is the same. And I don't know about you, but there has been some gains now seen versus the Bitcoin pairs. So profit has been made. It's just not quite fulfilled the full 60% that we've that we I say we. I mean me. The 60 to 70% top targets. But remember, they are top targets. So we're up a little bit. We've still got a bit further to go, about 25% to start, and then finishing off overall with about 60%. So we'll see how the week unfolds. But as far as today is concerned, I would expect a bit of a pullback into those supports. The support given to us mostly by Bitcoin, which is where it is basically right now. And if that breaks, another support back down here, which is a lot stronger. Like I say, 28,900 we'll call it. And that would be, for me, an opportunity to buy the dip on some altcoins that I've highlighted. For myself, I'm not a signals group here or anything like that, but there are certain altcoins that I do like the look of that I haven't bought within this period yet. One that I'm interested in, to be honest with you, is Pundi X, right? Now, I've got this theory, so you can you can stop the video now if you want. But I do have a theory about Pundi and PundiX, and it's the token swap theory. If anyone's ever looked at I don't know how long you've been around crypto, but when they do these token swaps, it's very, very often the case that the token swap performs just like its previous token, right? So that happened with eGold, happened when it was Elrond. Elrond had this huge massive rally, turned to eGold. eGold sort of dumped and looked a little bit like this and went onto this huge massive rally, performing exactly the same as it was when it was the Elrond token. Same thing happened to Storm Play or Storm. That did a massive huge rally, turned to StormX, it went died, looked like this, and then went onto a huge massive rally. PundiX used to be something random. Well, what was it called? MPSX or something like that. And it looked like this for a long period of time, and then it basically just went absolutely bonkers. Huge, massive performer, thousands of %. Then it did its token swap and basically turned into PundiX and died a horrendous death. But this is what these token swaps often do, and then they re-emerge in the same fashion that they did previously. So I do think that that's what's going to happen to this one over time. So it might be something to put into your portfolio as a bit more of a higher risk long-term investment that could yield you, 10 to 50x or something by the end of this entire cycle. So I think it's a decent one to hold, especially if you get it lucky to get it at a lower level, lower than where you bought it, or where it is right now. But if we look at the chart setup, there's no itchy cloud setup, there's no pump signal, there's nothing like that. But we do have a fresh golden cross. We are ever so slightly above it. We could pull back into it just below 47.8. So we could be looking for a pullback into that, and that's where we would be more interested in a pump. We also could look at this 12-hour and go, well, actually now I recognize that we're coming out of a big fat cloud here, we're getting ready to generate a pump signal in the next 4 hours. So that pump signal could allow us to pull back into the 200 exponential for a golden cross. Pump signal will be generated in 4 hours if we basically close this GQ span within this gap of cloud, and we'll be good and ready to go, really. So I'll be looking for that to hopefully play. But again, this is not the best thing you've seen in the world. It's just a low volume coin that could see one of these famous spikes that you often get with Pundi. Anyway, I'm not highlighting this. I'm not a pump signal. I'm not a pump group. I'm not anything like that. I'm just saying that sometimes it's worth looking at some of these smaller, crappier ones, especially if there is still a potential of an alt season that could benefit all coins, especially these ones which trade quite low. The good thing about low volume coins like this is that when they do get popular again, this is where you do see the 100x sort of thing. So I'm not saying this is going to do 100x, but I remember buying into Holochain, last season, really, just before the alt season kicked off, because it was a similar kind of setup to this, and that did a 35x within a couple of months. So a lot of percents was gained out of that one. Obviously I scaled out all the way up, but so yeah, I made some serious cash, but I wasn't all in at the bottom, all out at the top. No, but I made some decent cash. Same sort of analysis would apply, really. Holochain was basically slow and steady decline with these huge pumps on the chart, mostly driven by the fact that it was very low volume. And it's that low volume that can actually be your best friend when things get popular again. And that's what we're looking for, isn't it, really? That's the whole point of buying things when they're low. Yeah, you might buy something, it might not move for weeks or months, but the analysis suggests that actually you're buying at an appropriate price, and then when things get popular again, maybe somebody says something about PundiX, or generally it just gains traction. You're at the top of the Ponzi scheme because you bought it when it was trading at 300, just short of $400,000, and then before you know it, it's trading at tens of millions in a 24-hour trading volume. That's where the big spikes come from, and that's who you sell to. You sell to the late buyers, you sell to the FOMO, you sell to Captain Noobmaster himself. Captain Noobmaster wouldn't want anything to do with this chart right now, because he'd look at it and go, oh no, I only want immediate returns, which often will give him immediate losses. Because I'll sell to him, won't I? I'll sell to Noobmaster. We need Noobmaster. Anyway, thanks for watching. And by the way, I'm not saying anything bad about new people. Captain Noobmaster has been around longer than me. He's older than me. He's way, way older, and he's been around for a long time. He just trades with emotions. That's all I'm saying. He's not new to crypto. I love new people to crypto. We want new people to come to crypto, but we also want them to learn what it is they're doing. Captain Noob Master is not new. He just hasn't learned. That's the difference. Anyway, I'll leave it with you there. Thank you for watching. I hope you have a nice day. Take it easy.